This is the only futures trading strategy you need to start hitting 10K per month in profit. You can see I've already made about 22,000 using this exact strategy. I'm on track to do another 10K, and the growth on this account has been extremely consistent profits, okay? Not a lot of losses in here, a lot of wins. And you can see that this is obviously a live account, a live cash account. I wanted to block out some of the information, but it's not a prop firm, nothing like that. It's all real, all live. And in this video, I'm going to show you exactly where to buy and sell on the chart using a simple 3-step plan, so you can do the exact same thing and grow your account very consistently like this. Now, if you guys don't know who I am, my name is Jordan. I've been trading for about 6 years. I've been full-time for the last 2.5, and I've mentored over 300 students at this time. We've already had a few students hit 10K per month, and a few of them even leave their job. And I promise you guys, if you stick until the end of this video, you will leave with a plan on knowing exactly how to do the same. Okay, so the first step of this plan is simply going to be learning supply and demand. Now, supply and demand is the strategy I use to make this work, but it's not just classic supply and demand. I'm going to break down exactly where to buy and sell on the chart so you know how to draw these supply and demand zones and do it the right way. Now, when it comes to supply and demand zones, all of this is based around speed, okay? Supply zones are areas of institutional selling. Demand zones are areas of institutional buying. And you can find these zones simply by looking at speed, right? Now, what does speed even mean? How does that actually work? Well, if we take a look at this price action here, okay, this is like literally yesterday on a 1-minute chart on NASDAQ futures. You can see we have a very fast move from this high down to this low, okay? How do we know that it's fast? Well, you guys can see that's pretty obvious, okay? You can see that price went from all the way at like 17,950 all the way down to like 17,830 in like literally just a few minutes, right? As compared to this price action right around here, this is actually not that much. Sorry, I gotta move my camera down a little bit lower. But there we go. You guys can see, okay? This price action is slow. It's very choppy, very up and down. This price action is a lot faster from high to low, okay? What does this tell us? Well, this tells me as a seller or as a trader that the sellers up here are very strong, okay? The sellers up here are what we call aggressive sellers. And aggressive sellers are where price is going to reverse from, okay? It's the same thing down here. You can see we have a really fast move up from this low down here. That's going to be a demand zone, okay? Why? Because price had a very fast move higher. There's very aggressive buyers down in this area, okay? And again, price only moves through aggressive buying and selling. Price does not move through limit orders. It's a very important concept you're going to want to understand. So when we see that price moves very fast at these areas, we know those are called supply and demand zones. Now, how do we actually trade this? How do we make this work? Well, the first thing is you want to use different time frames, okay? And the time frames that I like to use are going to be the 1-minute and the 5-minute time frame, okay? So the 1 minute is this, 5 minutes is going to look like this, and these are the time frames that you're going to want to be using when trading this strategy. Now, it's really important that you're also trading only the first 1 to 2 hours of the market open, okay? Now, you can trade pre-market, you can trade after hours, but what I found is that only trading the first hour or two makes it really easy, really simple, and it's the cleanest price action, okay? You can do this on NQ, you can do this on ES. I like to trade NASDAQ, but it's really up to you. Now, the way you draw these zones is actually really simple, okay? What you want to do is find the kind of base or consolidation period right before the fast move starts, and that is going to be the start of your zone, okay? So if we're taking a look at this example down here, if I get rid of these drawings, you can see that price comes down. We have about 2 candles of consolidation, and then we have a huge fast move higher, okay? And so what you want to do is take the candle right before that fast move happens and use that as the top of your zone, okay? And then you just want to extend it all the way down to the bottom of that move, and that is going to be your demand zone, okay? It's a very, very simple way to draw it, right? So all I did, if I zoom in, was take the 1, 2 candles before that small consolidation period, draw it from the top of the candle down to the bottom, and I extend it out, okay? Now, you guys can see very clearly, what does price do? Now, we came about like probably a few ticks, around just like 1 tick away from actually hitting this demand zone, but this would have been a very good opportunity because how does supply and demand work? When we form a demand zone, we see that there are aggressive buyers in this area, right? So if we know there's a lot of aggressive buyers down here, if price comes back to revisit that area, we know that more aggressive buyers are going to step in. And that's exactly what happened here. And so what you could have done is easily scalp this so you can do the exact same thing. Now, these zones don't happen just in terms of reversals as well, okay? They happen in the middle of moves. Now, what do I mean by that? Well, if we take a look right here, you can see we have this huge move lower, right? And yes, you would see a pretty good supply zone all the way up here at the top, right? You see we have this little consolidation, then the fast move starts on this candle here. So this is where we'd want to draw our zone, okay? Right around this area here. Okay. Now, what you can also see is that in the middle of this fast move, we kind of had a 1-minute consolidation candle here. Okay. I can zoom in. So you have this fast move lower, small consolidation, another huge drop after it, okay? Now what you can do is actually have those little kind of consolidation areas as their own supply or demand zones, right? So I could even draw another zone that looks like this, on this 1 minute consolidation period, and extend it out, okay? And you can see when price comes back up to that zone, we end up reversing off it for just a few points. Now, a cool little hack that I actually like to do that you guys can use as well is actually switching to the line chart, okay? This is something that not a lot of people like to do, but the line chart is really, really good at spotting supply and demand zones, okay? Because what you see is it's very easy to see that this is a fast move, right? It's just a straight line down. But you can also see we have like this little kind of like nick right here, this little kind of indent in the move lower, and that's a good area of where that supply or demand zone is typically going to be, right around here. And you can see if I just kind of draw this area as a little zone, extend it out, we come right up to that same little indent and then reverse off it for a few points, okay? So using a line chart is kind of just a quick little hack you guys can use as well to help determine where these zones should start or actually end. Now, the way I like to trade is also looking at the 1 minute and the 5 minute time frame at the same time. Okay, so I'll typically have two different charts up. What I'll do is I'll have the 1 minute and I'll go to the 5 minute, and then you can sometimes usually get an even better zone, okay? Because if we take a look at NASDAQ here, what do we see? We have a huge, green minute consolidation candle. We have this fast move lower. And so if we draw our zone from the bottom of that consolidation candle all the way to the top and extend it out, you can see price would have came up to it here, reject it, here, reject it, even a third time, and reject it, okay? So there's a lot of different opportunity here where you could have made some money, right? Same thing. If we go on this on a 5 minute, now the zone ends up becoming a lot bigger, and later in the video, I'll show you guys kind of exactly how to enter and exit. But for this example here, right, it's still a big zone. It still would have worked though. Even if you got in this demand zone, put your stop below this low, you would have seen a reversal come from it, okay? If we go back even to that 1 minute chart, and again, this is why I like looking at both a 1 minute and a 5 minute, you're going to do the exact same, right? If we bring this all the way back down to here, just like that, and even extend out even more, you can see we touch it for a second time and get a nice reversal for a few points before we end up breaking below it. Okay, so step 2 of this actual strategy is going to be determining your entries, exits, stops, targets, all of that. Okay, the executions are really, really important when trading the strategy. So I want to break down exactly how you should do that. So let's go ahead and start with stop losses, because stop losses are extremely important. You want to make sure you're using good risk management with good stop losses in order for the strategy to be successful. Now, the way I do my stop losses is very, very simple, okay? If you have a supply zone or you have a demand zone, you simply want to put your stop loss like about 1 point or 2 ticks right below the demand zone, okay? Or 1 point or 2 ticks right above the supply zone, okay? The way these supply demand zones work is that if price goes above this supply zone, then the zone is invalidated, meaning we were wrong on the trade, we were wrong on the thesis, and we want to be out of the trade. Price should not break above this high because we had so many aggressive sellers defending this area. So if we see buyers that are able to take price above the aggressive sellers, that shows us that buyers are now in control and we want to be out of the trade. Now, same thing with the demand zone, right? If price comes down back below this demand zone, we want to be able to get out of the trade. So it's a very logical stop to have when trading this strategy. Now, the entries part is actually also really important because you want to make sure you're getting in at the right spot so you're not missing moves, but also able to keep a good risk reward. And the way I like to get in entries is also really simple. Right when price gets down to my zone, I like getting in right at the top of the zone. Okay, so in this instance, it would be right around this 17,844, which would have bottom ticked this move. And in this instance, we're looking at a 5 minute chart here. This would have been a short enter right at 17,909, okay? So you have a good idea of where your stop loss is going to be. You have a good idea of where your target's going to be, your entry is going to be. And doing that makes trading really easy because what you can do is just draw these zones on the chart very simply, and then you have a good idea of where your entry is going to be, where your stop loss is going to be. You don't need to overcomplicate it. Don't need to make it really confusing, okay? You simply just let the zones do the work for you and trade based off them. Now, when we start to talk about targets can be a little bit different, okay? And there's a few different ways you want to determine targets, okay? Now, the way I like to do them is through two different methods. Okay, the first one is going to be through either another supply or demand zone, okay? So again, let's say, for example, I'm getting in long right here, okay? We get in long down in this area, and we see another supply zone right around here, just from this fast move lower. So we want to put our target up at that supply zone. Okay, it's a very logical place to put your targets. Right? Same thing vice versa. If you're getting short in this supply zone up here, right? Remember we have this 5 minute supply zone up here. You want to be putting your targets down at demand, okay? Because price is going to go from supply to demand. Now, it's not going to do it every single time, Otherwise, price would just stay in a channel, right? Eventually, at some point, price needs to break and you will get stopped out. But being able to target these supply and demand zones, at least it's logical. And you know that you're going to be getting out at a good area. Now, the other way that I like to target is based off R value, okay? And so what I can do is, you guys look right here. We have a nice move higher, nice little consolidation, and a nice little pump higher here as well, okay? So we have a pretty solid demand zone right in this area here, okay? And you can see price ends up coming back down to it. We get a nice reversal right up to the supply zone as well, okay? Now, the way I like to do my targets is really simple, right? Instead of simply targeting supply, or maybe we're targeting this supply up here, right? You don't really know where to put your target. You can do it based off R value. So I like to use this little tool on TradingView. It's this one right here. It's like the long position. And what it does is it allows you to see your risk reward on the actual chart, right? So if I know I'm getting in right at the top of this demand zone here, I know my stop loss is going to be right below the low, right? Then I can go ahead and target 1R or 2R trades on all of these different stocks or tickers that I'm trading, right? So I can move this and see, okay, if I'm getting in here at 17,875, I'm putting my stop loss at 17,864. I want to go for a 1-1 risk reward, then I know my target's going to be here at 17,885, okay? And I can trade like this, so I know exactly what risk reward I'm getting on each trade. So if I'm risking $500 on this trade, I'm going to make $500, right? Now, what you can do is actually combine the two and say, okay, maybe I want to go for 2R trades, and I know that we don't really have any supply till all the way up here. I can get myself a better risk reward. So I can get in down here, put my target all the way up here, right before that supply zone, and now I'm getting at a 2.3R trade, okay? Which is a really solid trade. I mean, so if I'm risking $500, I'm going to make, over $1,000 on this trade, okay? By being able to keep a good risk reward, you can have really good metrics for long-term success trading this strategy. Okay, so I want to go ahead and talk about step 3, which is going to be a very, very crucial part of making the strategy work and actually seeing your account grow. And that's going to be setting up a system for rules, okay? So what I'm going to do is just going to draw this down here and say system for rules, and it's going to go like this, okay? Now, I'm going to show you guys a few rules that I use in my trading, and you want to set yourself up a list of rules that you can use that make sense for you, okay? So some of the ones that I use while I've been growing this account, for example, is going to be only taking 1 to 2 trades per day max. Now, why did I set this as a rule for myself? Well, when it comes to trading, okay, especially looking at a 1-minute chart or a 5-minute chart, there's going to be a lot of different supply and demand zones you're going to see all the time. Okay, you're going to see on basically all throughout the day. Your eyes are going to get used to it. There's going to be a million opportunities. And what you want to be able to do is put in the rule to say only taking 1 to 2 trades a day, because you're going to allow yourself to only take the best setups, right? Because if I start taking, let's say I allow myself like 20 trades in a day, I'm going to see demand zone here. I'm going to see, this mini demand zone right here. I'm going to get stopped out. I'm going to see a mini supply zone here. Going to get stopped out, right? You're going to get very caught up in the 1-minute chart looking at all these different moves, and you're going to lose track of what actually matters, which is sticking to high quality zones, okay? Because high quality zones are extremely important, and you want to make sure that you're doing that in the right way. Now, if you guys do want to learn what an actual high quality zone is versus a low quality zone, what I've done is I've actually made a free supply and demand course for you, okay? It's inside a community that I have. I'll put a link in the description below. You can check it out after the video. But that's going to help you out a ton because it's free, and you guys are going to be able to learn exactly what a high quality zone actually looks like. But by allowing myself this rule of only taking 1 to 2 trades per day, I'm going to be very patient. I'm going to wait only for the best setups. And that's exactly what I like to do. Now, the next rule I like to do for myself, okay, is risk the same amount each trade. This is going to be crucial if you actually want to see success, okay? Because let's say, for example, you have like a 60-70% win rate. So 60 to 70% win rate. And let's say you are not risking the same amount in each trade, okay? So out of 10 trades, you have 4 losers, okay? And let's say on one of the losers, you lose $500. On the next loser, you lose 1,000. Next one, you lose 100, right? If your losers are just all messed up and you're kind of back and forth on how much you're winning and losing, it doesn't matter what your win rate is. You're not going to see success with this trading strategy, okay? It's just never going to happen. What you need is to be able to risk the same amount each trade. And if you do that, and you have a win rate that is above 50%, you have a good risk reward of at least 1 to 1, or 1 to 2, then you're going to see consistent profits using this system, okay? So it's really, really important that you set yourself a rule where you're risking the same amount each trade, okay? And which leads me actually to my next one, which is going to be risk reward. Always go for 1-to-1s at a minimum, okay? 1-to-1 risk reward at a minimum. So what does that actually mean? Well, it means that, again, if I'm drawing out my tool here, we're not going to go for a trade that has a bad risk reward. Okay. So let's say, for example, let me go ahead and delete this. Let's say, for example, we go on this 5-minute chart, and let's say we have this big demand zone right here. Okay. Let's just say we draw this massive demand zone right here, really big zone. Okay. And let's say we know that we have the supply zone all the way up here. Okay. We draw it like this. And so let's say I'm looking to get long in this demand zone right here, right? So I look at my long position. I'm going to get long right there. Right as price enters the zone, I'm going to put my stop loss right below the low. I'm going to target, where do I want to target? Target the next supply zone. Now in this instance, that's actually would have worked out. But let's just say our supply zone was down here, okay? And I do my math, I do my calculations, and it's only about 0.86 risk reward. If that's the case, I don't want to be actually taking this trade. This would be a trade I avoid, okay? And what I want to do is set myself a standard and a rule by only taking a 1-to-1 risk reward at a minimum, okay? It doesn't mean I'm always going for 1-to-1s, but it's a minimum, okay? You can always go for 1-to-4, 1-to-5, 1-to-6. The best risk reward you can get, the better, but you want to make sure you're being smart about it, okay? I'm not going to sit here and go for a crazy risk reward where I'm, going for a 1-to-8 risk reward because there's no supply zone till infinity, right? You want to be smart about it. You want to keep yourself relative to time frame and find yourself a logical target, whether it be based off risk reward, whether it be based off another supply zone, which in this case would be right around here. Okay, this next supply zone. So if you're looking at the 5-minute chart in this instance, you wouldn't want to trade it. In the 1 minute, it would probably make more sense to trade that because you can catch yourself a much better risk reward if you're getting in all the way down here, putting your stop loss below this low here. If I draw this demand zone down like this, and just like that, now you're getting about a 3R trade. This makes a lot more sense. This is a much better trade to take. Now, the last rule that I wanted to set myself for this account, which I totally recommend you do, is setting up something that I call OCO orders, okay, on every trade, okay? And the way OCO orders work are extremely simple, okay? They're pretty much on all brokers, on all the different accounts you can do. And it works like this. You simply get into your trade, you get in your supply or your demand zone, you set your stop loss, you set your target, and then you walk away from the trade. You let it do its thing. You don't sit there and micromanage it. You don't do any of that, okay? Because on every single trade, you should know exactly how much you're going to lose or how much you're going to make before you're even inside the trade. Just with this strategy here, I know if this is the trade I'm taking, I'm going to risk 17 points. I'm going to make 58 points, okay? And there's no micromanaging to be done when trading this strategy. I don't need to sit there and wait for something else to happen. I don't need to sit there and move my stop loss up, right? You can get more complex with it and add in different variations like moving your stop losses and things like that. But trust me, it's going to be the most simple and easiest way to trade if you just set an OCO, which again means one cancels the other, which means, okay, you get in, you set your stop, you set your target. Then when price hits your target, it will automatically cancel your stop order. Okay, so you don't need to worry about it. Same thing with your stop. If you get stopped out, it will automatically cancel your target order. You don't need to do anything there. Okay, and using these rules have helped me grow my account extremely consistently and extremely fast. And we're not here to make money fast, but the strategy works extremely well. And if you're using these rules, you're going to see a lot of success doing this exact thing. We've had a lot of students do the exact same thing. And especially if you're understanding what a high quality supply demand zone is, you can do the exact same. Now, this is really just a piece of the pie. And if you guys are interested in learning more about how I was able to grow this account and you want to learn how to become successful as a trader and be mentored by me, what I'm going to do is leave another link in the description aside from the free supply demand course you can get. And that one is going to go over a free training video I made showing you exactly how a lot of my students have been able to grow their accounts consistently. Okay, and after that video, if you guys want to watch that training video, then you'll be able to hop on a call with my team and see if you're a good fit for our mentorship. If not, all good. The free supply demand course is going to be in the second link in the description there for you guys. Definitely check that out. It's 100% free and it's going to help you out a ton with this strategy. And as always, guys, if you did enjoy, leave a like, subscribe, comment down below. I'll see you guys in the next video.